Win up to 98% of your trades. Is this BS? Does win rate even matter? In this video, you're going to learn all about win rate. I know that I mentioned that you can win up to 98% of your trades, but YouTube is very competitive. And the 98% that I quote is primarily for clicks, because the reality is that you can win 98% of your trades and still lose money when you trade options. Your win rate definitely matters, but it's only one component of your total expected return. When selling options, there is asymmetric risk. In 2022, I had a big loss in PayPal, and even though in 2022 I still had a high win rate, the PayPal trade wiped out a lot of gains. The concept of selling puts is very simple. You agree to buy a stock at a price that's below the current market price. You're essentially selling insurance and selling risk. If Amazon is trading at $100 a share, you can agree to buy Amazon at $95 by selling a put option with a strike of $95, and you can collect a lot of money. Then that trade is going to end up getting challenged probably around 30 to 40% of the time. And when it's challenged, you can roll that position. In this situation where you're selling a strike price that's only 5% below the current market price, your win rate is probably going to be around 60 to 65%. But you're going to collect a lot of premium because you're assuming more risk. You can also, if you wanted a higher win rate, agree to buy Amazon at $50 a share or 50% below the current market price. In this situation, your win rate will be close to 100%, but you'll collect very little money because you're not subjecting yourself to a lot of risk, because Amazon will have to fall 50% in order for your strike price to be challenged. Another example, if you like basketball, the year that the Golden State Warriors won 73 games, you could have bet the money line and won 7 out of 8 times whenever you bet on the Warriors. Or during the NCAA tournament, you could take the 1 seed during the first round whenever they play the 16 seed, and you'll basically win every single one of your trades or every single one of your bets. The issue is that because the odds are so much in your favor, very similar to the Amazon trade where you agreed to buy it at $50 when Amazon is currently trading at $100, if you bet on the 1 seed when they're playing the 16 seed, because they're favored so heavily, you're not going to win that much money when you bet on them, even though your win rate is going to be extremely high. And going back to the times when you would always bet the money line on the Warriors, it is possible that the 12.5% of the time that the Warriors lost, and therefore you would lose your bet, that those losses would end up wiping out all of your gains from the wins, even though you ended up winning 87.5% of your bets. Because during those 87.5% of your trades or bets that you won, you ended up winning a very small amount. Whereas during the 12.5% that you lost, you ended up losing a larger amount. So the win rate is not something that you should focus on. The only reason why I use the win rate is because it gets clicks, and YouTube is a very competitive environment. So when people see that they can win up to 98% of their trades, they're interested in this trade structure and in this trade strategy. However, it's much more important to make sure that you cap your downside and that you reduce and minimize your portfolio volatility and your tail risk. And the best way of doing this is by buying put options. By buying put options to protect your portfolio, this will allow you to make money in all market environments. When the market is going up, you'll make money on the short puts. When the market is going sideways, you'll make money on the short puts. When the market is going down, you'll make money on the long puts and also on the call spreads. But you also have to make sure that if the market crashes, that you own enough long puts in order to offset any losses that you might incur from your short put positions. So what should you target as an overall return? When I first started trading, I used to think that you can make around 50% a year, but I was wrong. I posted a video that showed the trading statements and all the trades where I made 117% trading a small account. Let me say that this was very lucky. Basically, everything had to break right in order to make those type of returns. And in actuality, you shouldn't even try to make 117% a year, because the higher the returns that you're seeking, the more downside risk you're also accepting. Your primary goal should be to reduce portfolio volatility and also to minimize drawdowns. And if you do it correctly, I do believe that you can earn around 2 to 2.5% every single month, especially if you use portfolio margin, because that essentially provides you with free leverage that you can then use the premium collected and buy T-bills and earn a free 5% every single year. So there you have it. Does win rate matter? Yes. Is 98% win rate unrealistic? No, it's not. But it's also not the whole picture, because due to asymmetric risk, you can have a win rate of 98%, and because your losses are going to be significantly larger than your gains, you can win 98% of your options trades and still lose money if you don't control the downside risk. Insurance companies sometimes go bankrupt if a hurricane hits their market. So you need to make sure that you always have hurricane insurance. David Jaffe with BestStockStrategy.com. You can visit BestStockStrategy.com, enter in your email address, and receive over $400 of valuable free content. Please watch this video right here because YouTube thinks that you'll greatly enjoy it, and I appreciate your attention.